All right, let's get into some of these videos. Tom Lee.
Managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. Would you say, towards the last time you were on, you talked about the Trump trade being pretty strong. A lot of things turned back, reversed. DJT reversed. Bitcoin didn't move into the mid-70s, got in the low 70s. I don't know whether the banks and other Trump trades changed, and all the betting markets certainly moderated late last week, came back a little bit. Do you have a change in your opinion on the election now?
Well, it does seem like over the last 4 or 5 days, the election really narrowed when you look at betting markets or the polls. And I know a lot of people don't necessarily trust polls, but I think the quality and the adjustments to the polls have made them more accurate. So I think it is really a toss-up, and it's going to be a very close election. And something our clients are preparing for, because we did a survey last week, 76% don't think we'll have a winner declared election night. And 43% roughly expect it 1 week after. So I think markets are kind of bracing for this period of uncertainty. I think that's why many of the trades have reversed.
We've also heard about some of the trading houses that are not going to be putting any software updates in this week, even some people who want to be here rather than overseas to make sure they're closer on the ground to see what happens too.
I'm just so confused by the election's close. I just don't see it being close. Like, I think this is just my personal belief as somebody that doesn't even vote, but I just looked at everything objectively. I look at the data. I look at what's going on out there. I don't see this election being close. I think Trump's going to win easily. I don't think it's going to be a contested election. Maybe I'm wrong. I just don't see it. Trump has won the men. He'll be weak when it comes to women that really care a lot about the abortion issue, right? Even though he's not like some, I don't want to get into the specifics of that whole situation, right? But the moral of the story is I don't see this election being close. I think he's going to do way better than with minorities than he did in either of his previous elections, 2016 or 2020. I think he's going to blow those numbers out of the water. I don't even think it's going to be close. And so I have a lot of trouble believing this is actually a close election, but who knows? I'm not a professional, election forecaster. I invest in stocks, and I do that pretty dang well, right? But we'll see. We'll see. Just from my data, I'm like, I don't see this being a close election. We'll see.
Yeah. So I think it's going to be a week where there's going to be a lot of worry. One thing I was thinking about over the weekend, though, is I think the market's fear of uncertainty will peak before. It's very likely it peaks before the election outcome's actually decided.
These signals that we've been looking at, one of the things, I don't know if you read about it, and I think we talked about it during commercial break last week. One of the things that's happened in the polls is the view that there's a lot more women going to vote than before. But that
yes, another demographic that I think Trump's going to do way better at than he did in the previous two elections is with the younger generation. I think he's going to do way better with the people under 30 than he did in 2016 and 2020. And I think it's going to be a substantial difference.
These signals, whether it be Bitcoin or whether it be DJT stock or whether it be the betting markets, may also all be off, if this is true, on the assumption that actually there is a very small percentage of the people in the betting markets who are women, for example.
That's true.
There's a very small percentage of people who are women who actually trade in Bitcoin, not who own Bitcoin, but who trade in Bitcoin.
True.
That's true as well. Small group of women who are trading in.
That's high level. Less high level thoughts there. That's seriously high level thoughts. Good respect on that.
DJT stock. What do you think of that?
That's true. 100%.
I think there's some credence to that, just because we know, like when you look at the Iowa polls, it was really the senior women voters that changed a lot, and you're right. These markets can be narrow, and they're very responsive to just changes in liquidity. And I think it's a very tight race. I mean, it's going to be very close. I think anyone who thinks that they know who's going to win is really playing with fate, because I think it's a very tight race.
Yeah.
That's me, Tom Lee. I believe it's not close.
When polls close, too, because we've got, there's a couple here. Pennsylvania, North Carolina, and Georgia are all East Coast. So if you have some definitive answers. They also, supposedly Virginia and New Hampshire are closer than people in the Harris camp would like. So there could be surprises early on.
Just wonder how long it takes when you have so many more people who have voted early or mail-in votes too. Those take longer to tally. So I mean, you might just by default be
like last time.
Yeah. I actually voted last week, and I actually had to wait for a lot of people. I mean, turnout is really what's going to swing this election.
And then there's a number of states, obviously, that, by the way, get the early votes and then don't begin to tally them afterwards. And they, for all sorts of reasons that I would raise some real questions about why they're not tallying them.
It's kind of a bummer when we see it.
Sometimes it's written into state legislation.
No, I understand that, but there's a view among those who are cynical about that they're not counting them until after, so that. And there are we've seen
except for what if
there's other countries that know by the end of the day. There's other countries that know that night, and they've been talking to, we're like a little bit envious looking around.
Yeah, you should be able to count.
Here's the problem. If they were counting them early and it was some secret, because you wouldn't want them releasing what the vote count was early, what if it got out? I mean, that's the problem with starting the count early.
I have not heard that as the explanation for it.
I'm just
and it's only red states that have done this. So there's you can think whatever you want to think about that.
So other than the election, because the elections, that's sort of what you hear about Wall Street. Elections don't really matter anyway. So if it is gridlock, which we don't know.
By the way, in regards to people on the desk, I'm like 90% sure that this gentleman's a Democrat. I'm like 90% sure this man's a Republican. And Becky Quick, I have no clue. Like, I think she might lean Democrat, but I'm not sure. She might be an independent. As somebody that's watched these guys for many, many years, just trying to kind of guess what I believe they are. Democrat, Republican, probably an independent. She could probably go either way.
That's sort of what you hear about Wall Street. Elections don't really matter anyway. So if it is gridlock, which we don't know, but more likely, I think the odds are on that too. So you're still bullish.
Yeah, I'm bullish only in the sense that election uncertainty has caused people to de-risk and cash to sit on the sidelines, but the fundamentals have been good. Earnings season's been very good. The Fed is dovish, and I don't think it's going to matter who ends up in the White House. Even if it's split Congress or a sweep, I think markets do pretty well either way. So it sets up for a really good rally into year end. But when it starts in November is just what we don't know.
No. So when you look at we were talking about what Buffett's thinking with Apple or what he's thinking with bank. I mean, you take Apple and a leading financial, and that covers a pretty big range of the markets. And Andrew thinks he's building an ark. Could you really? That wouldn't work. There's too many species to bring on there with him.
I'm just saying he's building a cash ark.
An
ark out of cash or something. Or is that what he's doing? He may be doing something else. I don't know.
Yeah. I mean, I know part of it is he's anticipating capital gains taxes could change, so he's taking those gains now. And he's not necessarily having a big cost of money because he's earning 5%. But next year, the cost of money is going to drop, so he'll have some pressure to deploy it.
That's interesting. Yeah, I am going to be very interested to see what Buffett does with all the money in 2025. Like, let's say we don't get the big crash. Like, obviously, if there's some sort of big crash in the market, then he's going to deploy the money out there, right? That's obvious. But let's say 2025, not a bad year. Let's say the market is flat. Let's say the market slightly uptrends, right? What does Buffett do with all that money? Does he just keep it in treasuries all of 2025? Or does he go make some buys? I'm really intrigued to see that. It's going to be very interesting. And also in 2025, does he build the cash position bigger? That's another big question. Like, could he build it even bigger and take it up to $350 billion or $400 billion, which is just, I mean, the amounts are just insane, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are three main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there. Alrighty guys, so let's talk a little Fubo. Let's talk about what's going on here. So first off, David Gandler had some very important words in the shareholder letter. Very important. He says, "We are pleased to report we delivered strong results in third quarter with continued top-line growth and bottom-line improvements. We achieved North American revenue growth of 21% and subscriber growth of 9% year over year, exceeding and meeting our targets respectively. We also saw improvement in our profitability metrics on a global basis in the third quarter, achieving a year-over-year improvement in net loss of $29.8 million, adjusted EBITDA $33.8 million, net cash provided by operating activities $27.4 million, and free cash flow of $31.3 million. Those are all substantial improvements, right? Moreover, the trailing 12 months have improved those metrics on a year-over-year basis by $110 million, $98 million, $95 million, and $96 million, respectively, demonstrating progress on our path to profitable growth. We continue to prioritize the delivery of high-quality, innovative, and frictionless experience to our users. That includes personalization across content and price. During the quarter, we executed against this improvement by investing in our product and technology. We are confident in our ability to leverage these investments to deliver value to customers and shareholders." Now, right here is very important. So if you didn't know, there's a big legal fight going on between Fubo, Warner Brothers, Disney, and Fox. And this has been going very well for Fubo. Very, very well. Pretty much as well as it honestly could be going. He says, "Our commitment to promoting a competitive streaming landscape that benefits consumers compelled us to file an antitrust lawsuit against Disney, Fox, and Warner Brothers Discovery. We are pleased that the court has granted us a preliminary injunction to temporarily block the launch of their streaming joint venture. While the court's ruling regarding the preliminary injunction did not specifically address the legality of the programmers' bundling practices, the court wrote that, quote, it is difficult to avoid the conclusion that on balance, these practices are bad for consumers. We are encouraged by the United States Department of Justice and the New York State Attorneys General are both considering filing amicus briefs supporting Fubo that in the pending appeal of the preliminary injunction before the Second Circuit. Our fight is bipartisan, meaning both parties are, kind of on the side of this. We are grateful for the support we have received from multiple members of Congress, public advocacy groups, distributors including DirecTV and Dish Network, and programmers. We look forward to the opportunity to prove our claims when our antitrust lawsuit is presented and on trial scheduled in October 2025. Right now, this is in my opinion only really upside. My personal opinion in regards to this for Fubo, if they get a big payout from these guys, that could be a huge benefit for Fubo, obviously, right? A massive cash infusion. If they get certain contracts signed between these players that they're going to charge fair rates, that Fubo can do certain things, that they're going to give them access to skinny bundles and those sorts of things, that's upside. So I see really only upside potential here. Worst case scenario is it just remains the same as it's remained, right? They don't win any money in regards to the situation. And additionally, they can't do the skinny bundles and things like that, right? Okay. Like that's what we've already been dealing with, and the company's still improving all their metrics substantially. So now in terms of North America, which is their main market, they do have an international business as well. The business is kind of questionable and kind of a joke of a business, just to be quite frank. Like, look at the revenue for this quarter in the international business, only $8.9 million. Honestly, they should just try to sell off the rest of the world business, in my opinion, try to get some cash for that, 10,
$20, $30 million, whatever they can get. Like I would, if I was Fubo and I was Dave Gambler, just try to sell off the rest of the world. It's not doing anything for the business, right? Now, as far as North American goes, they just had 1.6 million plus subscribers. That's versus 1.47 million in the same quarter last year. That was year-over-year growth at 9.2%. Revenue for the company came in at $377 million versus $312 million the same quarter last year. That is growth of over 20%, almost 21%. Average revenue per user came in at $85.64 from $83.51, right? So good numbers across the board. Then as far as global expenses as a percent of revenue, almost every single category has dropped or stayed the same, right? 3% depreciation and amortization. G&A, general administrative, jumped to 7% from 5%. My guess is because of the whole lawsuit situation, all the legal expenses there, that raised that up. I don't think that's going to continue to go on there, right? Technology and development, 5%. Now, this is a huge improvement. Sales and marketing, that fell to 14% from 19%. That's phenomenal. Broadcasting and transmission fell to 4%, right, from 5%. So that's really good there. And then subscriber-related expenses fell to 82% from 89%. So phenomenal in terms of that. Net cash provided by operating activities in the third quarter of 2024 was $2.4 million, a $27.4 million improvement compared to the third quarter of 2023. And free cash flow in the third quarter of 2024 was negative $1.1 million, an improvement of $31.3 million for the company. This is what we want to see, okay? Now, in terms of their guidance, our fourth quarter 2024 revenue guidance projects $426 million to $446 million of revenue, representing 9% year-over-year growth at the midpoint. A little bit of a sleepy number there. My guess is they're going to pull back on marketing expense quite significantly in the fourth quarter, which is going to help the profitability likely immensely for them overall. But yeah, 9% revenue growth, not the most exciting number. But remember, we're mostly need to be focused for the next 12 months on profitability. Revenue, we can worry more about revenue once we get to 2026 and beyond in trying to ramp back up revenue. For the next, in my opinion, 5 quarters, profitability. Focus on the bottom line, focus on the margins of this company. Now, right here, this is very important in the conclusion. Fubo's third quarter 2024 was notable for ongoing subscriber and revenue growth alongside improvements in key profitability metrics, all important markers that give us confidence, that continued confidence in our 2025 profitability goal. In addition, we are gratified by the recent wins of the ongoing fight for a fair, more competitive marketplace. The streaming industry remains under constant disruption, which Fubo sees an opportunity to build a distinctive sports entertainment streaming platform with consumer needs at its heart. We look forward to sharing updates on our progress as we continue on our path to profitability in 2025. Phenomenal. I love that. Right there in the conclusion, twice a mention about profitability 2025, right? Now, in regards to their income statement, huge improvements here. Huge improvements, right? So go ahead and take a peek at total revenue, right? Total revenue was up about $66 million roughly year over year. Now, the way they kind of always think about the gross margin of this company is they usually do subscriber-related expenses and broadcasting and transmission. Add those two numbers together. You get $331 million there, right? So if you take 386, subtract that from the 331, you basically now $55 million gross profit, we can call it in the company. Now that's an insane improvement because it wasn't that long ago that this company was losing $100 million plus on gross loss. Right? So to now be in the plus $50 million plus in a 1 quarter basis, this is huge. And we're seeing this quarter after quarter after quarter of massive year-over-year improvements, right? So this is phenomenal. Now, if we go ahead and take a peek here and we go ahead and run these numbers, they were at only plus 19 at this point last year versus plus 55, right? Additionally, revenue grew $66 million roughly year over year, while subscriber-related expenses in broadcasting and transmission only grew $30 million. So we're getting more and more leverage there, which is extremely exciting. We keep this continuing on for this next, we can call it few quarters here. We could be talking about gross profit that goes into $100 million plus range very shortly here, which is exciting, right? They kept a lot of their expenses in check other than G&A, which once again, I think a lot of that goes back to kind of the legal stuff, right? So operating loss, 58 mil versus 83 mil, huge improvement on a year-over-year basis there. What is that, about a $25 million improvement roughly year-over-year? Huge improvement, right? Now, if we look at total other income, there was $4.1 million in the plus versus negative $1.4 million. So if we look at net loss from continuing operations, it was negative 54 mil versus negative 84 mil, so that's a $30 million improvement. Now, we're continuing to see this company quarter after quarter after quarter bring down the losses substantially, right? And keep in mind, this is always their big loss quarter. This is always like their huge loss quarter compared to all the other quarters. Why is that? Well, because they usually spend heavily on marketing in this quarter. And the reason being is this quarter runs through September 30th. Football season is huge for Fubo. So they run a lot of ads in August and September when football season's getting up and rolling to attract everybody, right? And then once those people are attracted, they don't have to spend nearly as heavy on marketing. They can cut that back through the remainder of the year. But a lot of people stay subscribed in the plans, right, with Fubo. And so Fubo's able to, let's call it, put themselves in a lot better margin situation in other quarters outside of this quarter. So what we're continuing to see from Fubo is a company continues to basically bring down these losses substantially, increase the revenues, and, I think we're going to be looking at profitability very shortly here in the company. There's no reason to not believe that. If you just know how to read the financial statements and you see the improvements quarter after quarter after quarter on a year-over-year basis, there's a clear trend going on here where losses are continuing to be cut down, and it looks like there's a pretty high probability that they will hit at least one profitable quarter in 2025. And any quarters they do lose money in 2025, it's going to be very small losses. Like we're talking about losses of maybe $5 million to $15 million, which is not a big number at all. Like this company had been losing, $80 million a quarter, $60 million, $100 million plus a quarter. So if all of a sudden we talk about $5 or $15 million losses in a quarter, like that's a night and day difference, right? And then in 2026, we can begin to have a conversation about the entire year being profitable, right? 2025, the conversation is any quarters they lose money, it's very small losses, and they might even have a profitable quarter. 2026, the conversation switches to a profitable year. And when you start talking about that, you take bankruptcy completely off the table. Once you take bankruptcy completely off the table, you're out of the gulag. You're a $5 plus stock then at that point in time, right? And so all the trends are our friends. They're all going in the right direction here. And so as a shareholder, this is all exactly what I need to see, right? Now, if losses were climbing or they were hardly improving, that'd be a whole different situation here. Cash and cash equivalents, $146 million in cash equivalents on the company's balance sheet, which is a very large number, especially considering the losses are being brought down substantially. Remember what I just talked about. They have a chance of maybe even a profitable quarter in 2025. And the quarters they do lose money, it's probably going to be $5 to $15 million type losses. The company has $146 million in cash on the balance sheet. So going into 2025, they're going to have 9 figures of cash with likely minimal losses in those quarters in 2025, which puts the company in a pretty good financial standing then at that point in time, right? And so that's pretty dang good. So the company shouldn't need to raise more capital. Now, there's always the wild card of a settlement or something, or an agreement between them and these big cable operators and the ones that control the channels, right? They're in the content. There's a potential that maybe they settle out of court and get some sort of big payout there, and that would be another big cash infusion of the company. I'm not counting on that, and I don't think Fubo needs that big cash infusion, but you got to understand, if they get a big cash infusion, like let's say they won not $100 million or $300 million or $500 million settlement or $1 billion settlement or whatever, because Dave Gandler mentions billions of dollars they've cost Fubo, right? Let's say it's not that big of a number, but let's say it's a few $100 million. I mean, do you know what that does to the balance sheet? And then when the company is not losing money anymore at that point in time, like, oh my gosh, right? So as a shareholder, everything's going the way I want. But you might say, why even worry about a stock like this, right? It's a stressful stock to hold, right? It always still has bankruptcy, like that's always a potential, right? And I lose all $42,000 I put in the stock in the public account. Why deal with the stress of the stock? I think that's a fair question, right? Because there's a lot of stocks I hold that just are not stressful. Meta, Amazon, a lot of those type of companies, right? Fubo has the potential to 5x or 10x in the next 24 months. None of my other stocks really have that sort of potential in terms of those anti-stress ones. Is Meta 5xing or 10xing in the next 24 months? No. Best case for Meta is maybe at 2x's in the next 24 months, but probably like a 50%, 75% gain, right? In the next 2 months, in the next 24 months, right? Is Amazon going to 5x or 10x in the next 24 months? No. Best case scenario for Amazon in the next 24 months is stock maybe appreciates 50 to 75%, right? So we're talking about $42,000 of risk in the public account here, right? For an opportunity for that $42,000 to either go to zero or that $42,000 to go to $200,000, $300,000, $400,000, $500,000 over the next 2 years, right? So the risk reward there, right? This is a big game of risk reward. It's pretty attractive. It's pretty darn attractive, right? And do I see everything going in the direction I need it to go, or is it going in the opposite direction, the way I don't want it to go? Everything's going in the direction I need it to go. They're increasing subscribers, right? They're increasing their revenues. They're increasing their ARPU. And additionally, they're bringing down losses substantially. So, therefore, everything's with this business is going the way I need it to go. And on the legal front, things are also going the way I need them to go as well, right? And so all the pieces are coming together here. And so that opportunity to make an insane gain here is getting higher as time ticks on rather than lower, right? And so we'll see how it all plays out. Worst case scenario, I lose all $42,000 I put in the stock. Best case scenario is this is a $200,000, $300,000, $400,000, $500,000 position 2 years from today, right? So for me, it's definitely worth the stress and the worry about this stock, right? Because it's pretty darn attractive, right? And it's pretty darn attractive. So we'll see how it all plays out. But I definitely like what David Gandler's up to with the company. He's doing a heck of a job.